Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Daniel Lam, your host for the podcast. All eyes will be on the FOMC announcement that's coming out tomorrow morning in early East Asian hours. 75 bips rate hike is the most likely scenario, but it is the press conference and the dot plot that will matter much more. What are some of the risks that one should be watching out for in this FOMC? Well, first of all, they may push back against any rate cuts in the second half of next year. Now, the asset markets so far are still pricing that in. So if the Fed were to announce that, it would be a major negative for risky assets. Also, they may indicate that visible economic slowing will be sufficient to slow, but not reverse further Fed hikes. So, for example, lower energy prices would be seen as good for taming inflation. But the Fed may say that, lower energy prices would support non-oil demand because the public has more disposable income to spend, and thus resulting in higher core inflation. Now, the key offsetting factor would be any comments about potential weakening in the labor market. This would be a prelude to a recession, and it may tame the pace of rate hikes. So now, let's take a look at what risky assets are telling us. Yesterday, we talked about the volatility market being relatively calm, and it's not expecting any meltdown scenario. And today, we will be taking a look at the FX markets. Well, historically, a significant strengthening in the dollar means weakness in risky assets. That's due to flight to safety. Now, if you look at the DXY index, it is close to its 20-year high. It has been testing that level for a number of days this month. Is it likely to break higher? Well, if you look at the technicals, DXY appears to be plateauing at this juncture. There has been some mild weakening in its upward momentum if you look at key technical indicators such as ADX and MACD. Now, there's some fundamental logic to this because the other key central banks are playing catch-up in their rate hikes to the Fed. For example, the ECB and the BOE. BOJ, of course, is maintaining an ultra-loose monetary policy, but then Japan just had its highest inflation print in decades. That would likely keep dollar-yen from strengthening significantly further from here. So yes, risk sentiment remains fragile, but both the FX and volatility markets are showing that much of the hawkishness have already been priced in. So that's all from me today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.